So now the fact that these interest rates are moving up from 134 to 151 could be the beginning of a new uptrend in rates, and that could improve the margin of banks and help the financial sector to rise.
So first of all, the S&P 500 is at an all-time high. Is it going to last, or is it going to fade away?
Well, let's look at this S&P charts on a weekly basis for now the last 2.5 years. What we see is that number one, we are above the previous high, all-time high of 2134. Number two, we are also above this Bollinger Band, so they were looking like it's breaking out of a trading range, which has been lasting for 2 years. Number three, you see the momentum is rising nicely on both indicators, so there is still a lot of potential and fuel to go on. And the fear has receded from 27% down to 13%, and that's usually levels when the market is faring well on the bullish side.
But on the short term, is it not overextended, or is it?
Well, you see, on any breakout, it looks like on the short term it is overextended, as we have immediately the stochastics and the MACD in the overbought area. However, one can look and draw steep trend lines along the lows of this rising mode that we have now for 2 weeks. And we can guess that most traders will remain bullish as long as this steep trend line is unbroken. Even though there is some pullbacks, I think we can look at the top, 2152, and draw a line around 38% retracement around 2020 and say that all pullbacks which remains above 2020 are going to be normal pullbacks opposing an uptrend, and from there could be a springboard up.
So is there any additional evidence for the bull's case in the US sector rotation?
Well, this is, I think, exactly the right question to ask. Let's look at this chart. We have the S&P here making new highs. We have on green the yield, the 10-year yields, and we see that the interest rates have been declining, but now are rebounding. Okay, and we'll see what effect it will have. And we also see the black line. The black line is the ratio of discretionary, so cyclical stocks, versus staples, which are defensive stock, consumer stocks. And usually what we have to notice is that when the market is moving up, the black line is rising. Or in other words, if the black line is rising, then it supports the fact that the whole market is moving up. It means it's on good fundamental. And this is now what is happening with this break to new highs, higher highs and higher lows. So this is good stuff.
So what else could help the bulls market?
Well, if we look at financials and we look at these interest rates trend, right? We have it here again on the black line, and we see that it was correlating relatively nicely with this orange line, which is the relative strength of financials versus the S&P. And we know that the financials, the big banks, are also a big part of the S&P 500. So now the fact that these interest rates are moving up from 134 to 151 could be the beginning of a new uptrend in rates, and that could improve the margin of banks and help the financial sector to rise. And we see here that so far, for the last year, we have been under a downtrend in the financial sectors, nominally. And we're getting close to the trend line. So a little bit help of rebound on the relative strength would allow probably to break this downtrend and give a new buy signals, and that will support tremendously the S&P 500 rise.
And the yen hit a top like you expected. How is this going to affect the Nikkei?
Well, indeed, the yen has made a top near 100 dollar yen. This is really the international component which is also helping the whole thing, in the sense that by a weakening yen a little bit, we've get also a rising Nikkei. So the Nikkei is making a clear double bottom around 14,800. We are back now above 16,000. So that's where the sentiment is coming back. And also, we notice here in this black line, after a big downtrend, now it's popping up. So it means that the end of the relative strength underperformance is near. and that now the Nikkei could eventually also even outperform the S&P 500. So both components are helping each other.
How is Europe looking at the moment?
Well, Europe is getting still in trouble or not doing so well. As we look at these charts, we just see a big downtrend here, the dotted line, and we see the double bottoms clearly, but it's not yet activated, and we are still within this little rectangle here, and it's at best a trading range. So we tend, as long as we have our relative strength of the Euro stocks declining versus the S&P 500, even though it is right now bottoming the last 2 weeks, we still wait until there is really more interest before we get bullish on Euro stocks.
And how about emerging markets? How are they faring?
Well, all the action has been really on the S&P 500, and we see that in the fact that the Indian market, which was really nicely moving up in relative strength versus the S&P 500, is just being flat in the last 2-3 weeks. So the interest is coming back to the S&P. We see that also this good outperformer is flat versus the other emerging markets. So all in all the emerging markets are doing as the S&P 500. Nominally, as we see here, they are making new highs, so it's good news, but they are not leading the whole pack so far.
And finally, if the global outlook is doing bullish, what about gold? How is that looking?
Well, that's probably a good question, and we just had some answers yesterday. Somehow we moved from 1355 on gold to 1335, and that, assuming we close the week around these levels, what we will get is a big black candle versus all the white candles here in the last 6 or 7 period, and that would be a weekly reversal. And that would tend to confirm my suspicion that we've got a trading range coming on between 1360 and 1250. So probably some profit taking is going to happen, and we see also the stochastic is soon crossing down here. I think what we need to realize is really focus on the interest rates that we have here. That's what we showed in detail. We had a new low 2 weeks ago at 135. The beginning of a reversal with oversold momentum. That means this movement could extend, and by extending, that will fuel the rise of the financials and fuel the rise of the S&P. So really the focus has to be on interest rate for the next 2 weeks.
Thank you, Bruno, for joining us in our studios.
You're welcome.
Don't forget to click back on Dukascopy TV for more programs like this, or subscribe to our YouTube page. Goodbye for now.